Hello traders, today is the 23rd of June 2010, a bit late in London, okay, and I'm sorry not to make a many video this week because I've been watching football, the World Cup in South Africa. I've been watching all the matches, okay, try to relax a bit, okay. Today now I decided to do this quick video for you. This video is about the S&P 500, okay. So on the 23rd of May 2010, I did a video and I was telling you that the S&P 500 must come down from this level here all the way down to this zone here of 670. Okay, I was telling you that the S&P 500 must come to 760, and I still stick to my prediction of this index, which is the market. The S&P 500 is the market. Because why am I saying that the S&P 500 must come all the way to 670? Do not believe what people are telling you or whatever, all the blah 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 in the market. Just pay attention to the price, okay? But here, why am I saying that? We just use the market pattern, okay? The market patterns are trend, pause, trend, okay? The price cannot violate that important stable data, okay? This is a stable data in the market, a truth, a foundation in the market, okay? So we know that the market will trend, and the market will pause, and the market will trend again. That's something true in this chaotic market. With that valid, stable data, we can work with this price, okay? So we know that the S&P 500 since October 2007 was in a downtrend all the way to March 2009, okay? So October 2007 to March 2009, the S&P 500, as you can see, the price was just going down, okay? Now, from March 2009, the price went all the way up here. People call it uptrend. I refuse to accept that this is not uptrend. This is what we call the pause period, because the S&P is a market. After a long trend, the market must pause. So the S&P as the market also must pause. Because we are on the weekly chart, the pause in the weekly chart is what we call the double bottom pattern. Okay, anytime you see the price creating a double bottom pattern, you know that the market has completed the pause period. Very, very important. Okay, so here we have this V part bottom here. The price touches this zone here and then went up straight away up, forming this V pattern. But in my previous video, I told you that the V pattern is only valid if it's backed by strong, okay, and sound fundamental, which means we have a strong economy, we have a business doing very well, we have a high employment, okay, everything looks good, the global economy is doing excellently, okay. This is when we are having a V bottom, okay. So don't tell me that everything is very, very excellent right now in the world with all the news that we are getting. So this V button here cannot be a valid one because we are in a recession, okay. Because we are in a recession, we cannot have a V button, okay. So if you know that a V button can only happen in a strong economy backed with a strong fundamental, you will know that this market, the movement from here to here is just what we call the ABC correction or the pausing period of the market. Okay, because the S&P represents the whole stock market, it must pause after this low downtrend from October 2007 till March 2009. This video, I did it before, okay, in May 2000, on the 23rd of May 2010, I made this video and I call it the S&P, the market. You can check my video, check for S&P 500, the market, S&P 500, the market. And I did that video, okay? That's exactly 1 month now. So now we see all this movement here. As you can see, I'm going to draw my trend line here on this weekly chart. I don't like this chart very much, but bear with me, please. This is my trend line now. The trend line is broken. What we see here is just the price coming to retest this trend line here, exactly here. When it come back and retest it, people will sold it big time. And right now, people are busy selling the S&P 500. Okay, so if you are day trading the S&P 500, just ignore completely all the bullish signal, okay, and focus only on the bearish signal, especially those who are swing trading or position trading. Very, very important, because we are working with a stable data in this chaotic market. The double bottom pattern on the weekly chart is the pausing period. The market must pause. The S&P 500 must come around the region of 670, okay, at least it should come to the 800 zone, okay. This is what we are looking for, or at least if it must come near the 881 or 880 or 670. The 670 will be the best place for the S&P 500 to come back and retest it, forming a strong double bottom before we can start talking about the uptrend of this market, or the end of the recession, okay? So bear that in mind when you are trading every day this index. Know that the index is in a pause period, because the market is in a pause period. And also, if you are trading other stock, know that most of the stock must follow the market, okay? So remember, look for stock that you can short and sell, but also pay attention to the fundamental, especially those who are swing trading, okay? But if you are day trading, be very busy looking for opportunity to sell at key resistance levels, okay? This is why you need to remember. So right now, what we are looking at here is that the S&P 500 breaking down slowly but surely. It will take maybe 2 or 3 months before it reaches this zone of 670. But by all means, the market must complete the pause cycle, because we have a trend from here 2007 all the way to March 2009. The market must pause according to the market pattern. If the market trend for a long time, the market must pause. This is true, this is valid, this is a stable data in this chaotic market. And the professional, they know it, okay? When it started from here, they knew that the market was pausing. They went all the way to 61% Fibonacci retracement level. Now they're bringing it back down again. They know exactly what the market is doing. They will bring it back down to 670. They're not talking about it now. They will bring all sorts of bad news to support the movement to the downside, because that's where they want to bring it. As soon as it touches the 670, they will start bringing more good news. Suddenly, everybody will start buying big time, okay? The professionals start buying big time, because they know that the pause period is finished and a new trend will begin. That's how you should trade. So now that the market must come down, you must only focus on stock that you can sell, especially for day trading. Day traders must be busy locating their key valid resistance on the daily chart, on the weekly chart, and also switching back to the lower time frame using their TSTW24 trading system in order to participate in the down movement of this market, okay? So bear that in mind when you are trading every day. Know that the market is in a cycle of downtrend, okay? It's not going to go up, it's going to go down, okay, up to the 670 region, okay? I'll be very surprised suddenly if the S&P 500 change direction and start going up. That will be a market manipulation or some forcing of the market, because the natural movement of the market must be down movement at this present time. So there is a trend from here, downtrend all the way here. Then we must have a pause, which is the double bottom pattern on the weekly chart, Price went all the way to 61% Fibonacci retracement. Must retrace back again to the same place where it started from before we have an uptrend, a strong uptrend. So remember that. So bear that in mind when you are trading stocks. Pay attention to stock that you can sell, okay, and disregard all the bullish signal for the time being, okay. I hope you enjoyed this video and you learned something from this. So till next time, enjoy yourself and be very happy. Thank you.